What's up? What's up? What's up, everybody? I'm James, aka Trader Grady, and another back test here of today's price action. Um, there was two OTEs today, right here in the morning session. Um, there wasn't my strategy. I kind of like waited for that today. Um, so it didn't hit today, didn't hit yesterday. So hopefully we can have it tomorrow on Friday. But there were two OTEs, and we're gonna throw that out today. Got the replay tool button on it. And guys, I know people be like, "Oh, you need a demo baller or the replay two baller." One of the things that I did learn from ICT is the more and more you practice something, the more and more you see it, and you back test and see it, it becomes imprinted in your mind, and eventually doing live action, you're gonna be able to execute it. So you got to do your homework every night, guys. It's just like being in school. You just can't just sit in a classroom, listen to the teacher. Eventually, you got to go home. You have to study what the teacher has taught in the class. And then when test time comes, you don't have to be really going back looking through all those notes because you have done your work. And when it's time to be tested, you will pass. And this goes on for life. Same thing it is with life. So with that, I don't want this video to be too long. So let me proceed. So I know y'all, again, you might be looking at all these different color of the candles because I have this imbalanced indicator on. Granted, we know what an imbalance is, right? So really my candles, the down candles are red, up candles are green. Um, we know that in between here and here is an imbalance, right? But I use this indicator because it just quickly highlighted on the and you can see all these little favorite indicators that I use for some things. So when I click that, boom, it goes and put um the highlight the imbalance in there quickly for me. So the ups turn, the green candles turn to blue, and the downs turns to black candles. Okay. So we're looking at this time frame is about 9/8. So we see all this placement from it's about 8:40 right after 8:30 bell. I don't even really want to really be looking too much of the market, but one of the things I remember when you have the market going into a range, and it actually did this yesterday too, y'all. When you have London and Asian session, right? In this type of boxy range. And you guys can back test this all you want. When you have it, not really want to do any movement up or down, going all the way through Asia and all the way through London. It did this exact same thing yesterday. These are what you will eventually see as you'll hear people call mostly ICT where he says seek and destroy. And what it will want to happen is eventually right before the New York session begins, you'll see a run up to one side, clearing out all the highs, and then eventually a run clearing out all the lows, right? And then from here, the market will then be which direction it really wants to be in, whether it's going to be a bullish day, because what it's pretty much doing is taking the buy stops, sell stops on both sides. It want to take all buyers out of the market because it honestly the market don't want nobody to make money. Let's put it like that. The market don't want anybody to make money. So it will give a reason like, hey, we want to be bearish. And so you can do your price action. You can see, hey, we want to be bearish, but what it's going to do, it's going to run out your stop losses. They want to take you out the market and then run in that direction. Okay. So that's one thing that you want to see here. But then after that, right before the New York session goes, and of course, I'm always going to have my TDI. I don't care what anybody say. Um, I love what ICT has brought to the community. He doesn't need these to see if something's going to divert or if it's high or it's oversold or overbought. I have not been trading for 30 years. So I need an aid. I didn't start this when I was 22. You know, I'm older. So I need all the aids that I can get. So this TDI, it's like the RSI with a Bollinger Band, that it works great for me. So you can clearly see when it's outside that Bollinger Band, eventually what it wants to do, it wants to come in. But I just don't rely on that. I just, okay, it's going to come down, so I'm around. But that's not necessarily what I want to do. I still want to see my candles. I still want to see how they form. Okay. This just put me on a high alert that something is about to happen. And then you want to see what actually happens here. And those who can read candles on this 3-minute time frame, and why I'm using a 3-minute time frame, because what I have noticed, and y'all can go and back test this all you want, when it comes to the NASDAQ, it loves these time frames. Of course, the 1 minute is one thing. The 2-minute, the 3-minute, and the 5-minute, it loves those time frames. And the 3-minute, it just loves those time frames so much. There's certain type of indicators that I created that's based off of the 3-minute. Um, so because 3 is one of those major numbers that's in the circles, right? The circle of life. Everything about 3 is in major numbers of everything. So I like to use the 3, and you're gonna see why. And I'm gonna show you on different time frames where it would have gave me a different analysis if I didn't use the 3. Okay, so here it is. We're gonna get into the 2 OTEs right in the morning New York session that could have been taken. So of course, one of the things that I've learned with ICT and this 22 mentorship is when you see um, right before displacement that a high was taken, right? So you see this high was taken out, right? When you see that high taken out, then a displacement, this is very key in future transaction, in immediate future transaction. So what you'll want to see, you'll want to see price come back somewhere in this area, either in this fair value gap, right? Or this fair value gap. These are things you want to see in the market, that where you want to see the market, where is da, 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 da. And these are things that I'll be looking for, guys. Um, I think they probably moved it. Um, I think it was let's use this one. So just go here, here, keep up in this section or in this section, and then back down. That's what you wanna see. All right. So let's get rid of that. However, another thing is listening to some old ICTs about the OTE, because I wasn't around when he first taught the OTE. So I had to go back and dig up some information about the optimal trade entry. And we see what I used to do is I should take my fib, put it on the wick to that wick, right? But I heard one of his older ICT videos and it says it's the body for the OTE, right? The body. See that? Now, why the 3 minutes is more interesting. Let's take a look at the 4-minute of this. See that right there? I'm not where the 3-minute would be. I would have to adjust this body to that, to that. Let's see what the 5-minute would have been. Oh, really different on the 5-minute. I would have had to come here. And that plays a very important with these retracement levels. So let's go back to the 3, and I'm gonna show you why the 3, to me, is a beautiful measurement when it comes to especially the OTEs. Now, y'all know that one of my other strategies, I like the 5-minute, but I'm gonna tell you something else that it did something different today. And this is why we back test, because we want to see that what we're going to plan on doing. Because see, when we do this, guys, you can wait. for all this. Just wait. Because what the market wants you to do is, you see this big old push, it wants you to start getting into a sale, right? Some people, oh, when it breaks here, I'm going to sell, right? I'm going to sell out. I'm going to sell. I want to sell. Oh, when it clears these lows, I want to sell, right? I want to target that all the way down here, right? This is what it wants to do. It wants to entice you, to get in here. Oh, we running lower. Sometimes you just got to wait. You got to wait. And by back testing, it gives you the confidence to wait and to wait for hours until your setup happens. Okay, so you can see here, 8:30, financial markets open. Right, we take out, those highs, the highs of the day so far, and then we rally down, clearing out the lows of the day so far. Right, because what the market did, it took out all liquidity. Now I'm looking for, y'all know I'm looking for this TDI to be oversold, but not just oversold below the 30. I want it to dip below that 25. Right? Everything's changed. I want to dip it below that 25. And where it gets to, if you look here, there's only 26. But then it pushed back up. When I'm back testing and I'm studying this move, I'm looking at when it pulled back, what was going on in this section to maybe say that maybe I could have got into that trade, right? So if I put a box over this section, guys, I'm a different type of teacher. I'm far from the best trader. I'm not even like one of the top 1 million traders. What it is I just like to teach, right? And when I'm teaching while I'm speaking, I'm actually teaching me at the same time. And I'm just taking you guys on this journey with me. Okay. So what actually happened in this section on the lower time frame? Let's go down to 1 minute. Okay. So on the 1 minute, we actually go down to 21, which is this in this section right up in here. So, but look at the price action in here. Those who know how to read candles, you can see that this candle, especially this candle right here, these are rejection candles. Why? Because see, this bearish candle, when the market came down and it went back up, what it did was it not only it took out all of those lows, right? Right there. See, it took all those lows and rallied back in, but the bodies of the candle stepped up above. So this was your first indication if you wanted to be a buyer back up into a premium, you could have done that right here. So this is something that you want to study. And when you want to back test reversals, when you start seeing candles reversing, check all the time frames and see what could have gave you an indication that you could have got into that trade. That's what you do. You see this candle right here looks very similar to that candle. But look what this candle was at. Look at this candle right here. It's inside this, what they'll call it, well, I guess an inside bar. It's inside this candle. This is not a reversal candle, though it's a continuation candle, but it's not reversing because we didn't go down and come up. But it is a continuation. This is not giving us an indication that this it want to come down now. So where the candles are on the chart and how they look is very key. All right. So let's go back to the 3 minute. So what we're looking for is a nice measured move. And guys, I'm about to show y'all something. Right? Let's move this. We don't need this anymore. And we don't need this anymore on the back test. So if you notice, no one else have this on their fibs. See that? The 0.9 and the 0.88. This is for NASDAQ. I can't speak for other currencies. This is for the NASDAQ. Majority of the time, when the NASDAQ does a retracement to go to continue in the direction that it wants to go in, with speed and longevity, it loves to pull this far back. It doesn't like, it doesn't really a lot of times pull back in this area and go back. It doesn't do that more often. It more often hits these areas. The 62 to that, it more often does it. It does the 62 more, but in here, if it start to squeeze through here, I got a really confidence that it's going to get up to this area, and I can just wait. What I get in trouble at, a lot of times people don't tell you what get in trouble at. Sometimes I don't know once it gets to here that it actually wants to drop. That's something I got to study on this side of the chart to see that it doesn't want to continue, and I can go ahead and take that trade. But you're going to see if it goes here, like I said, we look down and study the candles and see if there's a candle that give us a signal that, hey, it doesn't want to go past here anymore. And so that's what we want to look for. Right. So let's go ahead and start playing this play tool here. And let's play this out. All right. Let's okay. So you see it, this other gap that eventually, remember I had here. I had that gap right there. Came up there, rally back down. Remember, this is 3-minute candles. Rally back down. What is retail thinking? All this in here, it's resistance. We want to go lower. The market makers know that, right? So look what the market makers do. See what they do again. See that? Let's see what they do again. Now, it filled this up. And on that 3-minute, came back down in here. Does it want to continue to go lower? It hit 50% of the way. It even closed in a fair value gap. This is why we back test. This is why we back test. I'm looking here, my TDI. It would not have been wrong. Once it gets to that middle of that range, does it want to just go back for further? Right? Let's see. Came down, fake this out. So again, look at that, guy. Look at that. In 3 minutes at 9:30. You see what the market just did. Here's the opening. Here's the close. So that means whoever was watching NASDAQ this morning, you saw what it did. It rallied up. Look where it hit, the 88%. And from there, it just dropped. It just dropped down. Let's take our measuring tool. All right, from the opening. Oh, let's go down to the 1 minute. All right, so here's 9:30. It opened, rallied. Just 9 pips on the NASDAQ. And then from there, the opening to the close, 5 pips. So it ran up. See that 88? Hit it on the 1 minute. I don't have 30 seconds. I would love to see what that looked like. In 1 minute, it ran up and touched that. And then it ran back down. I told you guys something about that 88% retracement and that 90. But like I said, we can look over here, see what was going on in this area here to give us why did it run up here? Like what was going on over here? We do have a fair value gap here, kind of close that up. We have this order block right up in here. We also have, what's going on here? See, there's a lot going on here, but you can see how it rallied up. But this is why if you didn't get in here, you got to be careful, guys, in this market. because your broker also don't want you to make money. Whoever you got your account in, and I don't know too many people say this, but one of the problems you have market execution is you will see this rally up. Whether you are a seller or a buyer, if you're not already in the market and you see this rally up, you may be like, you might get, say, like you get FOMO, like, oh, we're going up, I'm going to buy. And when it gets here, you push the button. You're not going to get filled here. You're going to get filled here. And the moment you see your trade execute, you're going to start seeing red. You're going to start seeing red. Not only because you got the spreads, which is like 1 to 2 pips, sometimes 3. So you're going to see they infiltrate you right up here, 2 pips above that. And you never got a chance to get your money back. Not today anyway. And then from there, boom, you're already 10 pips down. You're already 10 pips down. Now, unless you had a limit order because you was anticipating this run up, you were probably good for a sale. Right? You were good. It filled you, dropped down. And then it came down with a lot of speed. And let's just see. Let's go back to the 3-minute. So we see that. All right. So this was one of the OTEs today. And where you will like to take your trades is, this is what you want to do. Here it is. You get to fill that there. As high as that is 7. Let's give ourselves some wiggle room for your spread. So let's make this 10. This, you got, guys, you got to do that. You got to do that. I'm telling you. You put your stop loss right here, and that market comes just here. The spread going to take you out. It's going to take you out. You got to give yourself room to breathe, right? And then to here is 28 pips. See that? Oh, no, 23. Sorry. It's 23 pips. But you want to at least target that. Now, when it gets here, what I want to do in my trading plan is I want to take off half of the position from that point right there. I want to take it off. And then I want to leave the rest half running. Right? Because just in case if it comes here and it shoots back up again, and then once I take off, then you move your stop loss. Right? But if your stop loss was there, then you just put your stop loss 2 pips be above the your entry price. Because again, spreads. You got to take in consideration that if your broker comes down to stop you out, they taking $2 or 2 points or 2 pips along with it. So you got to leave room for spreads. And then the remainder here. And then from there, if you want to stay in the market for the day, because you here, if this was 28 and this total here is 17. So what you eventually end up getting, because you took half off on the other one. So you grab 14, right? And then you taking the other half, you're taking 14. Another half, if that's 14, that's 20 along the way, right? No, how much was that? How much was that person? I'm sorry, guys. All right, just round up to 24. Okay, 24 to 34. Okay, so that's the first one was 12. You took 12 off, so just 12 is still going, but then another 10 is added. So now that's 22. Okay, so that's 22. And if you're using 1% risk, you just pulled up a 3 for 1, right? It's a 3%. And with that, let me see here. 2 seconds, guys. I want to give a shout out to Nate. How he mentioned that you only need 1% a day. And that's what, as traders, especially when you come into this industry, that's what they teach us. 1% better a day, you're fine. You're eating. You're gonna eat for 1%. So one of the things that what within my trading plan is 0.25% risk. So that's what I'm going in with, 0.25% of risk. So 2 back-to-back losing trades, that's 0.5%. Okay, that's 0.5%. And you're done. I'm done for the day. Doesn't matter because I'm gonna wait. I'm gonna wait for my trades. I haven't taken a setup yet. Have taken one on a competition that I'm doing, and with that, all I was trying to target was 20K for the month of December. I'm not really trying to do the competition to see if I can beat anybody because that's I ain't even worrying about that. I'm doing a competition to see can I hit 20% a month. And the competition I'm doing is with Funded Trader. And I had grabbed 23,000. So I got 123 for the month. So that's what I traded today. Is that, and for the week, that's what I pulled up for the week. For that competition. A new competition starts in soon to January. So I like these competitions because these are my demo accounts, are the competitions. So find these prop firms that have these competitions. This is what I highly recommend. Grab these prop firms and use those as your demo accounts to practice and practice and practice. And then when you get a little comfortable, then only you know when you're ready, then take one of these challenges. You know what I mean? And develop your strategy and stick with it. Train yourself to only do that. You see markets moving, just train yourself to only do your strategy and you'll be fine. So let's see what this end up doing. It runs down. Look at that. Boom. Shot up. Guys, I didn't develop this. This is something I got from ICT. The settings. I just added some of the stuff in here that he doesn't have. Like of course, I don't know if the original Fib had this or not because I've been through so many things, but some of these are retracements. If it's on the 1 minute time frame and it's overbought, but it still wants to go in some steam and into that direction, it tends to retrace up between 26 and 28 and then continue to go on. Don't take my word for it. Do your back testing. You'll see it. So, and then these standard deviations, the half, the 1, right? I didn't think sometimes the market is not going to always rally through all these standard deviations. But if you're in a good trade, it'll at least get to the this one right here, the half, before doing a full. It'll at least do a half. And you can eat with a half, right? If you want to go in with 1% risk, you just did 3%. And you're good. You can walk away from the market. The wonderful things about setups, a Pacific setup that you have, it does not happen every day with the pair that you're trading. You might have to look at it on the other pairs, right? Like it might be on the 500, right? Because today, see how this had got so close to my thing and it didn't do it. And I'm going to show y'all, look. But it did, everything else happened out. Like if I go to my VWAP And this is, y'all know about my strategy that I put up the other day. I put up my VWAP. It's outside the second, trades right in back into VWAP. This whole series of this whole trade, there was two of my tradings right in here, but because this one did not pass the 25, I could not get into this trade and just I had to watch it just go back up to VWAP. And like I said, risking 1%, that's just 9 pips, right? Really want about between 10 and 20. So I wouldn't have took this trade anyway. Like I want to see it hit about 20 pips on this one on that strategy. So it didn't do that, right? So take that off. So we have here now. Here's the second OTE, right? So we bring this here. Why we move this? Because this here rallied up. It came back at least 50%. And I think I saw another video of ICTs talking about now that's when you move it. If it would have came 38, I would have kept this from here. But because it whipped down, retraced at least 50%, this right here comes the new um measured move. And then you'll go here, right? If it continues to go forward, you'll move it. But other than that, you're waiting for fair value gaps, right? Waiting for fair value gaps. There's no one here this time. So it's most likely this next pullback will not be in this range. Got to be thinking about this, guys. Got to be thinking about this, guys. Come on, let's hit this button. More speed. It went down. See that? Hit another button. Look at that. Look good, don't it? Let's take a look at this fair value gap. That and that. Right? See that? So it's not 50% yet because it'll be up here by this. So we still want to chill a bit. Right? Now, but check this out, guys. A divergent. This is why I like the TDI. Look at this. Lower low. Lower low there. Right? But on this bottom, under the bottom, it made a higher low. That bottom, that bottom. See, tops. That's good. The bottom, because you're looking at the bottom because we're bearish right now. It's bottom momentum. So that's what we want to look at that. If we were trending up, we want to look at the tops. Right now, we're looking at the bottom. So we see a divergence. So this right here has a big indication that it wants to come back up here for not a long time, but just from some time. But still, I don't have a trading strategy for these reversals right here. I don't have it unless it's on the 1 minute time frame, or where you're looking at market structure shift, and then pull back into some fair value gap. But outside of that, I mean, and those are sometimes difficult to trade. So let's put it down. Ooh, check it out. We still diverging, but we're gonna pull that to the body. Remember, always to the body. Right? Let's look again. Hey, look like we got a little something here. Boom. Again. Look at this, guys. Still stretching. Look, TDI is still being obedient. Here. Oh, look at that push. Now the pushes are kind of tighten up. Check that out. Like all these wicks in here, man, they were NASDAQ was not being fair with nobody. It was like, we going up. No, we going up. No, we going up. No. Now we seeing something. So this here is giving me a little indication that we want to rally up. But y'all can see I got this thing right here. So for some apparent reason, this is very key. Sorry. Spoiler alert. Look at that. It doesn't want to leave this area just yet. Some people will call this an indecision. The market always have a decision. We just don't know what it is. It's waiting for time. Another thing I learned from ICT is waiting for time. Right now is not the time for it to do what it needs to do. All right. So then we go here. Ooh, check this out, guys. We are displacing, man. We are getting a lot of price action here. So just move that there. Check this out. Notice how this here was up in here at one time, but as long as this is stretching, it's moving our 88 and 90 down. I love it. I love it. I love it. I love it. Because see, what this is telling me, eventually I can get a big move. Let's just say that from here, I don't know just yet, from here, it starts to rally back up, right? And let's say it gets somewhere up in this area and comes right back down to here. That is 35 pips. That's what I'm looking for, guys. I'm not looking for the gyrating around and all this other stuff. You can have that. I don't want it. I want it to come up here, and as long as it doesn't pass over here, then I want to be selling again, going back down. Right. So let's take a look at this. See, okay, more wicks. Now check this out, guys. This is another thing that I know is about the TDI that I like. So from this point here, we're at 30, right? And these are 3-minute candles. So from this move to here, it's a lot of movement. But notice the TDI is still on 29. What that tells me is this. This is just my logic. There is not a lot of volume coming into the market. Why the market is moving is because of the market makers. They're in control. Now, I need someone who really knows how the market makers move to confirm that, because that's just what I think it is, because there was no movement at all, but these candles that did a lot of movement. So these are not real, so to speak. The market makers are trying to get people to take sale positions, looking for, they say, okay, this is an order block and I'm going to sell off. They want people to start selling. Yes, the market is in a downtrend. So it's clearly is in a downtrend, but it's taking all this gyrating around. Look, these are rejection candles. And look what it did. Push down again. Look, all these wicks, these are rejection. It doesn't want to go down no more. And what it do? Shot down again. Let's take another one. Look, boom. Now, but here's the head. Now watch the magic. Watch this. Look at that. Look at that, guys. Our 88 is getting very, very close. Now let's see what happens. Uh-huh. Boom. Look at that. Boom. Now we coming back up. Oh, we coming back up. Now, where do we want to be a seller? And like I told y'all, if it doesn't go to 62 and drop, it ain't hanging around in this area. I just don't trust it. I don't trust it's going to hit here and drop, hit here and drop. It's most likely, if it passed 62, it's coming here to 88. All right. So this is what I'm going to do. I'm going to put him here. But look at our stop loss now. Now, because we have won some trades here, I can risk. That's 15, right? 20. Voila. Now, because now I got a 20 pip stop loss, I'm not going in with the same size. Okay. So let's just say, if y'all see here, I'm on this competition account, and because of the competition, I'm using $100 for every dollar. Okay. I'm using $100 for every dollar. So let's say I'm trading this on that competition. And those first trades were okay. I gotta get some math for you guys. By the way, guys, I'm an accountant. I gotta get some math for you guys. So if the first one I'm using 10, right? And so I get to use a 10 standard on $100,000 account. I'm using 10 pips. And so when it first ran, those first 24, I took half off. So I would take 5 standards off, and it would left me with another 5 running. And that was 14 pips. Okay. So 14 times 50, because it's 5 standards giving us $50 times 50. That's $700. Remember, this is a $100,000 account. So that's $700. And there's 700 still running. Now, that other 5 did a total of 34, right? So this 50 times 34. So that was 1,700. 1,700 plus 700 is 2,400, right? So that's pretty much 2.5% a day. Right there. You could have chilled. Or you can think like this. I want 10% a week, right? You divide that into 2.5 a day, 2% a day on average. But you got to be thinking that every day you really don't want to be trading. And these setups doesn't happen every day. So, but when they happen on the day you're trading, you want to take the most of it. So if you can come away with 4 or 5% a day, you're not tripping off of the next 2 days or the next day. You can take it easy because your target for the week, say like if I'm just using it for that, it's 10%, right? You targeting 10% on a week. So you got to do that type of math. So now on this trade, if this execute now, there's going to be a 20 pip stop loss. So I'm not going in with 10 standard. I'm going in with 5, right? Because we didn't already won today. So I'm going in with 5 this time because it's 20, the 20 pip standard, right? So that means 50 times 20. That's $1,000. That's $1,000 risk. Similar like the other one. The other one was 10. That was $1,000. So you end up getting a 2.5 for 1, right? You can't go wrong if you're doing that. The problem is we don't want to be trading just because we see this here, we want to hop in. Just because we see this pullback, we want to hop in. We want to define our trading strategy and just simply wait for them. Let everybody else get caught up in the traps. You want to wait for them. So if I'm here, I'm waiting. Times pass, I'll try to get in a trade to ride it up in there, and then it just collapse. Right. And if it just collapsed, then I don't have a trade. I will look for now, still waiting on the market to be overbought, oversold over these lines though. That's what I'm always keeping my eye on that while I trade these other tradings within. All right. So let's go ahead and hit this button. Oh, getting close to 62. Oh, uh-oh. Check that out. We blew past 62. We hit the 70. We're in the fair value gap. Pretty much consummate encroachment almost. Here, we outside the Bollinger Band, telling us you got to make a decision because we're going to either have to adjust to go higher or we're going to collapse back down. Okay. Now, I don't really know what the orange and the greens are and what significant is. I guess I'll study it later. All right. So let's hit it again. Check that out. Oh, it seems like we're dropping. Uh-oh. Look at that, guys. Did y'all see what it hit? Now I'm gonna put this sell on. All right, and we're gonna do that 5. Like I said, let's move me out the way. Let's do that 5, man. Let's hit the sell button. All right, and just use this for example. All right, so check it out. Already 100 up. 1825. Look at that. Ooh, back down. Oh, yeah. Oh, what are we targeting? Hmm. I don't like this, guys. This right here seemed like a little too far away for me. So since we already up, and this is the second one on this leg. See this fair value gap in here? I'm going to target that. Like it can go all the way down there. We don't need it. We're already up 2.5%, guys. So don't be greedy. One more. It kind of gave me 16. It really should take me out right here, right? But this one thing about this thing, it doesn't have a take profit. Let me see one more thing. Okay, we're gonna take it here, right? Flatten, flatten. Okay, so we made 24, and then another 25. So that's practically close to 5% into that. You can chill. You can chill. You can chill. And those are the two OTEs that I saw today. And I did not see my strategy at all. However, before I go, let me show you this the TDI I use right here. Sometimes it disappears for some reason. I gotta sometimes put it on there twice. I didn't get rid of it. So that's the TDI I use. Um, however, when I go to the 4-minute, this is like one last thing before I go. When I go to the 4-minute, it did do it. See that right there? 24. And then here was a 25. But it did do the 24 around 9:48. But look what it did when it did the 24 9:28. Let's get rid of this. So this is the 24. It rallied up and it came down some more. And it didn't give me not even a 25. And if I put my VWAP back on, right from here, that price leg that I just got into, that was the retrace there, ran back up to VWAP. I could have taken that trade only if this would have dipped below the 25. It gave me a divergent, giving us a reversal. The 4-minute, see, the 4-minute didn't give a divergent. So this is why I didn't divert at that time. But here it did. 24 is a low, but it made a lower low. And then 25.33, which is probably still could have pulled it off. So this is something I got to really study. If I do, I really want to put it off because you see the divergent. Could have just bought it up here, but I didn't take that. So, but what y'all want to do is from the point at where it did it at, once this candle closed, that's where I want to be a buyer, and I want to buy right back to VWAP, which is 26, and those are the ones that I want are at least 20. If it doesn't giving me 20, I'm not going to take it. And then when you look at it, I can always say one last thing. When you look at it, that's the entry, 10 pips, right? That's a safe bet. and then VWAP 26. Risking a 10 standard, which is $100 point in the on the indice. And so you're grabbing 26. So that's 2,600. And you're good. You're good. Eventually, I would as long as I keep looking at this months, years, I can develop the take these and the OTs. Those are my favorite trades. OTs. I tried trading like the silver bullets and stuff. Sometimes it's a little confusing to me. I like OTEs, especially off of the 88 and 90. Like I said, definitely doesn't do this every day. So Friday, I'm not even gonna look for this, right? I'm not gonna even look for that because it did it twice. Boom, boom. All look at that before 12 o'clock. Not even lunchtime yet. And like I said, I want to be out before it even reaches. I don't know if it's gonna reach there or not, but let's see. Let's take a look. It got down to there. Very low. Let's go ahead and play that out. You see what I'm saying? Because it did it. This is the second time doing it. Like this deep in retracement. I wasn't trusting it was going to even get this high. So look for the fair. Once it crossed the 50%, you look for a fair value gap, right? So, and the 50% of this measured move, this right here. Once it got past that, it's 50. Look for the fair value gap, and that's what really you want to be taking. There's a fair value gap there too. It's all up in here is where you don't want to be trying to get caught up in that, right? So with that, everyone, you guys have a good night. It's Thursday night. It was the 28th today. Tomorrow's the 29th. Friday, the last day of trading outside of crypto for the new year. I mean, granted, Sunday market open, maybe. You might got a couple of days on the 31st, but tomorrow's technically the last day. Guys, have a blessed day and happy trading.